Okay, what's going on, guys? Sorry about that. Just give me one sec. How's the sound now? Just give me some feedback on the sound and we'll get started. I just got a stream deck and I just set it up for the stream. So it took some time to calibrate and get used to. So as soon as I get a sound is good. Okay, cool. Put on some beats in the background. And we'll get it started. All right. Sound is good, sound is good. Cool. I'll give everyone a minute or two to join in. How you guys doing? How are we feeling about the market? Sound is great. Wow, what a compliment. Thank you. I was just looking for good, but great is awesome. Thanks, guys. Okay. A lot of familiar names. Get started in a minute. Give everyone a second. First part of the stream didn't have any sound, so let everyone catch up. The pup, she was actually just laying behind me, but she was chewing on a huge bone, and there's the sound, like when you buy the bones, they have like that, I don't know, some kind of material on them still, and it's obviously organic material, or it was, but she chewed all that sort of, I don't know, tendons or ligaments off of it that were still connected. And now it's just bones, so her teeth are just scraping on bone. So I kicked her out. My monitor system set up. I've gone over it a bunch of times. 49-inch Samsung curved 232s above that, and then a 29 on its side, or 32 or 35 on its side, and that's what you're looking at right here. And then the 35, maybe 35, and then 49 across underneath them. So cool. All right, so we'll get started. Thank you guys for hopping in. Obviously going to talk primarily crypto. Just the basic stuff out of the way first. I have this nice sweatshirt on. It says, "What I say is not financial advice." So make sure that you take that seriously. None of this is financial advice. This is strictly for entertainment purposes only. Everything that I say is just my opinion on the market, and that's it. I don't want you to go smash the buy or sell buttons on behalf of this stream. I do want you to obviously hit the like button, hit subscribe if you haven't already subscribed. I said about 2 weeks ago that I was going to start getting back into streaming more consistently, and I've kept up with that promise, and I think we've done 4 or 5 in the last week and a half. So if you could go ahead and give us a like, give us a follow, that'd be great. You'll also see that on the lower left-hand corner of the screen, Phemex and Bookmap, as you've known now if you've been following for 2 years, myself and Rager are partners with Phemex. We are on the team. And if you're interested in that exchange, spot, perpetual swaps, yield, still no KYC. If you want to KYC, you're incentivized by not having to pay trading fees on spot. So you could join their subscription-based trading program. And what that means is I think you pay $20 a month to have no fees on spot. And that's if you KYC. If you don't want to KYC, it's a non-KYC exchange just like Qcoin or KuCoin, however you pronounce that. So I also have started working directly with Bookmap. So, you guys have seen in the last couple of weeks, I've been featuring Bookmap a lot more, getting into the platform, what the benefits I think are that what benefits I think it has. I use the DOM, which is phenomenal. So you see those on the screen. Yes, partnerships do imply some form of monetary compensation. It's 2021, right? Just have to get that out of the way. Some people get pissy about that. So you'll see on the other screens it says, paid content, right? Because we do have partners. And you'll also see that it's not financial advice. Gone over this 100 times, but just in the case that there is a new person on the stream, I think it's important to cover this sort of basic bullshit. Like to keep the streams as real as possible. No sensationalism. I'm not a streamer. I'm a trader. I see someone who said, tell us your trading journey. I've gone over it probably a couple hundred times at this point. I've been trading now for 15 years, started trading equity derivatives, moved on to crude oil, and then primarily got into trading cryptocurrency in 2017. That was when I started really actively trading it. I had a very passive approach initially, just dabbling, getting exposure, passively indexing in the space. But I started aggressively trading crypto primarily in 2017, and 90% of that trading has been focused around BTC. I am primarily an intraday trader. I like to be flat by the time I go to bed. I'm old now. I don't have time to miss out on sleep. Sleep is precious. My dog wakes me up enough in the middle of the night as it is. I don't even have kids yet, so I can't imagine what kind of trouble that would bring. But I like to go to bed flat. I think you can make an insane amount of money trading within normal market hours. I will obviously from time to time take a more generalized approach, looking for swings, longer term position plays, picking up spot. I haven't been in spot since around 60K. That really requires a lot of evidence on behalf of the market, or the market rather needs to produce a substantial amount of evidence for me to really get re-involved once the trend changes. Once the trend changes on the basis of multiple points of market feedback. So, we've lost significant structure. It's pretty obvious that traditional markets aren't really doing too well right now, going into an FOMC, so maybe some clarity outside of that. But again, most of my approach intraday, I'm an order flow trader. That doesn't mean that I just look at order flow and trade off of that. It's something that I build an argument with. I also use market profile, right? But I've used moving averages. I've used, all the tools that you guys have taken a peek at. I've probably looked at them at some point or another and probably could answer all your questions with regard to them. There's no one way that is better than the rest, unless I would say you are just strictly picking up an Elliott Wave book. But I know Elliott Wave traders who are plenty profitable as well. It's all about just building a system and consistently applying it after you see that it is yielding positive results in a large sample. Okay, cool. I think that's it. All the formalities aside, I just as a heads up, this is not for children. I use poor language. Sometimes I speak in incomplete sentences. I get lost on tangents. I speak in ellipses. I'm pretty much, I've become my wife in that sense. Right? My wife would start talking about a subject, and then I'm like, God damn it, when are you going to get to the point? But all right, so also, heads up. Let's just change the screen. So let me get familiar with this cool-ass terminal. And we are going to trading screen. All right, and we still have volume, so it's working. Let me go to center so you can see a little bit bigger. All right, so doing a giveaway, right? Superlatives, my Superlatives NFTs, I have a bunch of them. I'm going to be giving away. I was going to give away one this Friday, but I decided that there was a friend of mine, or a friend that I've known his wife. We went to high school and middle school together, and it's not like I talk to them often or anything, but became reacquainted with him through crypto. Kind of odd, but decided to give one to him, and then I'm going to give another one away because I have a few of these. So all you have to do is go to the post, like, retweet, comment, whatever, and I'll randomly pick from that. Another thing that I wanted to point out, and I promise we'll get started after this, is right here. If you haven't already signed up, I'm working with call-in. So it's sort of like, I know this shit is boring. Sorry for doing this stuff in the beginning, but whatever. Not really that sorry. Call-in, it's similar to Twitter Spaces, but after we do it, so hey, we talk about something cool in the stream. We talk about something that's over your head. I say something that you think is stupid and you want to confront me. Love it, all right? So, and I don't love confrontation. I was a wrestler my entire life, so maybe I do. But call-in is similar to Twitter Spaces in that all of us can be in the room. all of us can converse, right? We could have a proper discourse. None of this bullshit that takes place on Twitter where it's like, this is my sort of spicy point of view and fuck your point of view and mine's the only one that matters and there's nothing really accomplished. I feel like nothing's been accomplished in discourse in the last 20 years. Probably because social media has sort of eroded away at the fabric of our ability to do that. But this is great because after it's over, you arrive late because you can't show up to shit on time, you're not punctual. Well, guess what? It's recorded, right? So you're not going to miss anything. So go ahead, subscribe to it. I know if you don't have an iPhone, it sucks. You can't go on it without it, unless you have an iPhone. Sorry about that. I really hope they improve that. I would expect that they do because, you're missing out on a massive amount of customers. And we all know that you're using something, you're probably a customer, right? If you're not paying for it one way, you are the product. So I hope you guys enjoyed that. All right, so go ahead and follow me on that. I'll post a link for what time we're going to do that later, a little bit after the stream. So cool. Let's get into that. Hopefully, fucking dog is making noise in the background. So let's go to the main screen. So our issues are starting to rise again. Namely, what I mean is that the VIX is up, right? I think the VIX got below 20 ever so briefly. We're back at 22 right now. Equity's taking a hit. Dollar up, everything else in the red. The only thing that is not substantially in the red, and it's only because Bitcoin is up too, is our ETF. Meaningless though, right? Most assets right now, further out the risk curve, suffering. Equity suffering, small cap suffering. Like I said, a sea of red today. The VIX is up. This is never good for crypto. Crypto, no matter what sort of, no matter what narrative you want to buy, what you want to believe, right? It's a store of value. It's a hedge against inflation. Blah 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 blah. It 99% of the time behaves like a risk asset. When shit hits the fan, when risk assets in general and legacy markets, things that are not necessarily risk assets, but we're just talking about higher beta. When the indices is getting hit, or indices are getting hit, so I'm just referring to, obviously there's multiple, but primarily going to be talking about the S&P, and I'll be charting the ES if you're ever confused, right? So E-mini futures contract based on the S&P, trades on the CME. So when we're taking a hit in legacy, it's very difficult for crypto to sort of keep its footing. So that's been more or less the case for the last couple of weeks. I shared a chart last week, I think. God, my sense of time is just, it's a mush. I shared a chart last week of overall depth, best bid, best ask, okay, top of book essentially, in the S&P, in Bitcoin, on the CME, and you can see that things have really started to thin out in the last month or so. And I was mentioning this again. We're going on now, I feel like a month ago. And this just means there's less friction to move price from point A to point B. So the market is sensitive. And obviously it's sensitive for a reason. We're going into, hey, puppy, what'd you bring me? Oh, okay. My dog is right next to me putting a bone in my face. We're going to the FOMC, whether or not we're going to see a rate hike. I think it's clear we're going to see a rate hike. But it's just a matter of how much. And if that's even, if that's something that persists. The course of rate hikes for the last 30 years has been trending down. We saw rate hikes before, right? In the last 2 decades, markets were able to move up on them. We had the taper tantrum going back to 2013, 2014. But, this is a sensitive time in markets, right? So the only thing that could really be a curveball, and the market is to a degree obviously pricing in a couple of rate hikes at this point. So we'll see if they change, sort of their wording, right? And you'll see the market respond very quickly to any kind of worrisome wording, or even any kind of dovish commentary, or something that might be perceived as dovish. And I would just say that, going into this event, you're going to get people that are positioning in advance of it. So you're seeing risk assets sell off. Right. Again, we've been moving down for quite a while. Hold on one second. My dog is eating my Christmas tree in my office. Come on, move out of there. Come on. That's what my wife gets from putting a Christmas tree in my office. So we've seen risk assets trending down. We've seen, the indices get slapped around a little bit. So tomorrow, if tomorrow is everything that we've been talking about and been expecting, it's not going to be a surprise. And I think that we'll honestly see markets bounce. Doubt hike, talk of hike. Yes, I think that it's taper. Great point, Topher. So I shared something that TD shared recently, and it's sort of a playbook for the language used. But I would say the talk of a hike is obviously on the table, expected. More taper talk, but just look out for surprises. And either way, sorry guys, I gotta get the dog out because now the dog is just in my field of view. Come on, get out of here. Hold on, get out. Come on, walk. Go bottom the cat. See you later. It's just a moment before the dog jumped up and tried to take the tree down. But whatever comes from tomorrow, I would say to not fade it because we've had a lot of positioning in advance of it. If the market continues down tomorrow post FOMC, and I'm not talking about the first 30 minutes after, I'm talking about any kind of developing trend outside of that hour period after the market sort of disseminates and digests everything that was said. Market starts moving up. What am I going to be doing at that point? I'm not going to be looking to fade what is probably larger flows at that point, sort of getting back in with more confident footing on a bit more clarity. All right, so crypto is going to take a hit if we continue. If we see a negative outcome tomorrow, right? Something unforeseen, out of left field. I don't think that they want to do that because more or less the markets are, again, a sort of a barometer for the economy or how well we're doing, even though we know that they're very disconnected. Trump used that to his advantage, right? Stock market's doing well. Look, everything's doing well. And I think that more or less that's pretty intelligent because most people do sort of look at the stock market as a reflection of the overall economy. And we obviously know that those two things can be completely disconnected. So that's what I have to say about that. I don't want to lose myself right now. Let's take a look at, there's a couple things that I do want to go over. Obviously, so on the top left-hand corner of your screen, you see Bookmap. Nothing has changed, right? So we had that 46 level that was traded in. So from just a static standpoint, if you're just looking at heat maps, and you guys know I've said before, but with heat maps, and Silico said sort of the same thing, it's passive, right? It's an advertisement. It doesn't have to actually have intention of being filled. So what matters is when we trade to these very significant levels, whether we're filled. So one of the more significant levels that we've been talking about now for the last, I think the level's been there now. I'm not going to go backwards. It's been there since the drop. So it's been there since December 4th. Has been that 46K handle. So 46K, you can see that we traded into it back here. So this is this area right here in the top left-hand corner of your screen. And that level stood, right? We transacted into that level. I think at the time there was like 750 BTC in the bid, or 750, someone was looking to buy $32 million or $35 million worth of Bitcoin. So I would say between 800 and 700 BTC. So we saw that level transacted, right? So obviously they did business. They did not yank it. I'm not sure whether the whole thing filled, right? I could see some of the volume here based on these dots, but my aggregation setting is a little bit different. So you're not going to see sort of the smaller dots that would be there. I'm looking for really the large orders that come through. But you could also see that nothing has really changed with regards to any kind of these downside levels. 40 to 40 or 42. Yeah, all the way down to 40. 40 all the way up to 45 is still, we still have some meaty zones within there. It's not like stacked. Like the market is still relatively thin. If you look on Bitfinex on its own, you would see that there's a pretty substantial bid. There's been some aggressive buying. You could look at, for example, we just look at Bitfinex next to Coinbase. So if you look at Bitfinex's price, it's at 66, Coinbase 58, Bybit 42. So there is there's been a consistent premium across those exchanges from Bitfinex down to derivatives. So Bitfinex has been trading at a premium now for a while with respect to all the other exchanges. Now Bitfinex order flow is the most important order flow in the market when it comes to whales. So I think that's an important thing to distinguish because you saw Sue talk about that. When it comes to whales getting involved, and yes, whales do sort of dictate a lot of the higher time frame activity. them accumulating, them marking up, them distributing, them marking down. We pay attention to all the other exchanges in terms of derivative products that lead by open interest, because in the short term, they're responsible for the shorter term movements, shorter term dislocations, all the things that I like to trade in intraday. So we have all this liquidity that's stacked below. Doesn't mean shit though, right? We could move down to 45.5 and the 45 handle starts getting coy and yanks. Same thing can happen all the way down to 40. So I don't look at this and say like, time to long, go away on vacation. Because again, this is just, we have to see whether or not they actually have intent when we arrive to that level. If we start moving away though, how this changes might also be pretty good, a pretty good signal as well. Let's say that, we start making course upward. I'll go over some details that I would, if I was fresh to this market and I was looking for some insight, some of these things I would look at, not necessarily things that I lean on. If I lean on them, it's sort of after I've already gotten in position, I'm looking back at them and saying, okay, we have all this confirmation. A lot of times I obviously try to time the market a bit better than waiting for some kind of really long lagging derivative of price, such as a moving average. I had a Red Bull, so I'm talking a little fast. But what was I saying? Damn. If price starts moving up, right? If we start reclaiming levels and we see that the bid now is acting with a bit more urgency and chasing price up, that could be a pretty good sign that maybe the bottom is starting to develop or be put in. And these buyers down here right now don't really feel that, maybe they're going to get filled at this point. So that's an important thing to focus on too. Again, that can happen where it's spoofing, but if we see 42 that's been here now since the beginning of the drop begins to trail up and moves up to 45, right? If we start seeing this behavior, that sense of urgency by those kind of buyers could be a sign that the bottom is being put in, at least some type of short-term bottom, right? Don't like to make too many long predictions about where price is. I'd rather say what I think for 5 years and say what I think for 5 minutes and what I think for 5 months. So what I mean by that is I think 5 years from now, I would, if someone said, hey, dude, you can only take one trade, guess what? It's either you think Bitcoin's going to be lower in 5 years or you think it's going to be higher. That's the only thing you get to decide on behalf of. I'd say, I'm putting it all in on it being higher in 5 years. But I don't like to make like predictions where we're going to be in 5 months. It's kind of a fool's errand to try to do that. So we see the stack, right? We see a fair amount of activity stacked below. Again, markets are thin overall though. So you see that, but in terms of overall levels of liquidity, it's not like conditions are that supportive of dense markets or very liquid markets right now. But again, as I mentioned, like the VIX when it's elevated is just a pretty good signal that if you're tempted to get in position, like I said, the best way I could put it is we've never put in a bottom when the VIX was still moving up for BTC. It's always been the case that the VIX has kind of cooled off before Bitcoin ultimately puts in some type of bottom and moves upward again. So I just want to go over a couple things, and this stream is, for anyone who's following the stream for going over profile and some lower time frame order flow, I'll get to that. But I do want to just, throw some bones out there for some things that are useful for the higher time frame, and just to show you that we're not, if you're looking to buy the bottom right now, it might be based on structure, it might be based on, Bitfinex order books. But if you're trying to use a tool that is a little bit more objective in terms of the trend, but again implies that prices has obviously moved and a good amount of that is taken already in the rear view or has occurred in the rear view, and you're buying slightly late, you could throw on some moving averages, honestly. So the 20 period, as you guys know, I really like to look at the 20 period on the daily when we're trending strongly to see, okay, how strong is this trend? How far away are we from this? The 20 period is your center line for a Bollinger Band. So I don't really use Bollinger Bands because I pretty much have a pretty good feel. It sounds kind of stupid. For where our 1-2 standard deviations away from that 20 period are. But when I put the Bollinger Bands on, you can see that the 20 period, that center line, it is the 20 period moving average. Just generically packaged, right? Out of the box using this indicator by its default setting. So we're still below here, right? No sign right now of reclaiming it in the near future. Weekly, same story. If we put on this as same as chart, another good sort of line in the sand level, right? Just for, bulls, bears in control, where do we sit with relation to higher time frame trend? An MACD, right? Moving average convergence divergence. So something like this. This, it's lagging, right? So it's usually the case that this works pretty well, but a lot of the time, since it doesn't turn immediately, people just forego looking at this as a signal. And then after the fact, you always look back at it and you're like, fuck, that crossover actually was actionable, right? If we're looking at this on, I like to look at timeframes between sort of the daily and the weekly. So you'll see that I have the 3-day. But sure enough, when this starts turning and moving back down, yeah, it's not as actionable in the near term, right? But it is showing you that momentum is beginning to decline, or has declined, right? Because again, it's a lagging indicator. But you could use something like this, right? These are not things that I use. I was looking over the comment and saw Ichimoku. These are not things that I use, right? But what they are is like they take a lot of the guesswork out for an asset that likes to trend really hard. Again, you're going to be late, right? But if you're a trend follower, what do you want to do? You want to capture, the meat of the move, right? If you could get 60 to 70% of the move, that's great. If you get 80, that's amazing. It's unrealistic that you're going to capture 100% of these moves, right? So the MACD, if we're looking at this on the 3-day, right? We're no sign yet of flipping. And this all goes back to if we're developing a bottom, yeah, I mean, could you technically buy right here and this ends up being the bottom? Yeah, absolutely. But what will you likely have to endure before that occurs? Right? So what you'll likely have to endure is, where's my drawing tool? Let's go, come on. What you'll likely have to endure is that, chop around this area. And yeah, sure, your buy might be down in that lower region, but it's just very unlikely that the market does what? Turns about faces and continues to move straight up. I keep saying, because I think it's sort of a good, try to use certain heuristics and, certain sayings so that they just kind of click. And this is not a heuristic, but, big ships turn slowly, right? We're far off the highs in the sense that, yeah, you shouldn't be continuously looking for shorts, in my opinion. Just from a sort of mechanical standpoint, when I've said this, that it's 25% for me, that's when I really start trying to sort of, critique my own thesis, right? If I'm going to stay consistently, if we're below 25% off the highs, I have to make sure that I'm not really getting wrapped up in a market that's already moved down a lot and continuously just thinking it's going to move down from there, right? At 25%, we're talking about Bitcoin, which has consistently, put in major turning points between 25 to 40%. Yeah, it's a wide window, but it's a window still that can be, actionable to a degree. So now instead we have hit 40% off the highs. We're 33, 32% off the highs now. I just think, yeah, could we have a black swan and we continue to move down? Sure. But are the odds in favor of us in the near future at this level off of the highs having some kind of mean reversion, even if it did continue to break down? Meaning, can we expect that in another tool that after you have a very significant drawdown and you find a base, that where are you going to throw back to? Well, at least I would say that, 0.5 fib. So, I'm looking at this down to here, and I'm saying, hey, with a high level of certainty, I think that we're going to be back at 57. And that means maybe we come back to 57 and we fuck off downward even more. But I just think that it's a high probability event. I think rather that there's a high probability that we'll be trading back at that level at some point. Again, how do you define a position around that? Where do you place your stop for that kind of trade? What do you look for to determine whether or not that is beginning? That is all up to you. But these are just some points, right? We're below our significant moving averages. We are oversold if you're looking at daily RSI. Not even close on the weekly though, right? We are oversold. Okay. Some people might be pointing out RSI divergences. Not my wheelhouse, right? I don't like to use that because again, it's just showing you what candlesticks are already showing you. The price hasn't continued to just fall off a cliff. Another thing that you can use as well though, and this has been something that is actionable, and I've talked about combining this with a moving average. So for example, we'll just put on the 10 period moving average. All right. We'll talk about the Heiken Ashy candles. if we don't have a green Heiken Ashi on the 2-day, on the 3-day, you're gonna have the chop around on the day, but on the daily, it's just, I mean, this has been a pretty useful. This is a candlestick setting, by the way. It's based on the range of progression or lack of progression by each candle with respect to. It's a formula that I don't know off the top of my head, obviously, but this is a pretty useful tool for trend followers. Heiken Ashi candles. We don't have any that are green on the 2-day, on the 3-day, especially on the weekly, obviously. On the daily, back in the red. So what I would say is, like, there are a lot of easy tools you could combine to get more of a systematic approach or mechanical approach to getting long again. And I guess my point is, because again, I don't use these, but they are simple to apply or build a system around, is you don't have any of that yet. So without that, the benefit of, for example, and I don't want to get too rudimentary because, this is not as, the market is changing, right? So we can't just say like this is always going to work. But the benefit of subscribing to these sort of high time frame trend-based tools, right, or indicators, is that it's the same as high time frame structure. So if we're looking at a major weekly level, major daily level, it's the same idea. When the market trades through that level, when it holds that level, it's showing to the most amount of people at that point that it's doing just that, right? That it's retaken a all-time high, or it's in this case, it's not a good example because it's one of the first ones that did not turn out actionably. But as I said, it's not like we had a tremendous amount of time between these 2 points. When the market overtakes the 20-period weekly moving average, when the market overtakes the 20-period daily moving average after a downtrend that's been sustained, you're showing to a lot of people that subscribe to that sort of school of thought or that kind of particular method of entry, that it's a green light, right? So at least in the short term, I think you get positive flows as a result of that. And what I mean by positive is just long activity. So I think that we're approaching an oversold point. I think obviously from a structural standpoint, we do have a low that is down, the next major low, that swing right down here, right around 40. We tagged right into that region. Do we have to trade all the way down to the low of the wick? No, not necessarily. We've seen many times before where the market has sort of found footing inside of this wick before putting in a base. But from a trend following standpoint, there are some other things you could go off of rather than just going off of structure and sort of looking for more nuanced details. But like I said, these things are lagging. So when we're above the 20-period weekly or the 20-period daily or any of the tools that I've talked about, again, this is just for an example. I don't know exactly where they are besides looking at this one right now on the daily. That implies that we're trading at 47 now. If for us to get back above that 20 period, you forego the opportunity to get involved earlier, and the 20 period is right around 52. So sometimes the cost of doing business, the cost of certainty in that case, it's not certainty, but a little bit more evidence. There is a cost, right? You get in later, right? Because it is a lagging indicator. All right, so I wanted to get that stuff out of the way. Again, it's not something that, like, I'll look at the 20 period from time to time. I've talked about how I've looked at RSI before. These are not things that I really refer to. I'm more of a structure-based trader, and I look at positioning and some other tools that I think are just a little bit more in my wheelhouse and that I've been used to. So if we look at overall market structure right now, and we just look at the futures market, the spot market, we have a few cases now of somewhat consistent negative funding. So we'll go to Coinalyze. So we'll go to more recently. One sec. Okay, go to the hourly. My 30-minute actually is a little bit better. Just to clarify, I went over something a few days ago. It was actually right at the top here where I mentioned that basically there was downside to expect. So what we had was, again, we've had on and off neutral funding, slight signs of negative funding throughout, but most of this structure has been, as you can see from this point on, when looking at exchanges in aggregate, positive funding, right? On this move up, here, this will make more sense now. So from this high to this high, Let me change the ink. And then this high to this high in stablecoin margin contracts on predominantly positive funding. We saw the price made a lower high overall, but our open interest for those stablecoin margin contracts went up. And that is on slightly positive funding. So my point here was, and I said this is something I'm willing to martingale into, is that from left to right, we see prices able to move up less, but there's more participation in this right side from an open interest standpoint. So without price being able to hold this level and being the fact rather that it was so far off of that previous high, this is a very easy rollover to occur. And surely enough, it did that, and it actually gave more than I expected in a short amount of time. But what we're starting to see is they're getting a little bit more negative funding prints. They're more obvious at these lows more recently. We do have some open interest increases that coincide with that. More importantly, looking at the open interest to market cap ratio. So that going up slightly on that declining price. What we want to look for is a point, because we don't really have it necessarily right now. We haven't seen any drastic increases. You would want to see that as price moves down, sellers are getting more aggressive and price is moving down less, and you potentially have a situation where sellers get off sides. So as price is moving down, right, we haven't really taken out any significant lows when we look at this range in its entirety. As price moves down, ideally, we want to see continue on negative funding, right? This is more recently that it stayed this way. And if open interest continues to go up with respect to that downward price action on negative funding, maybe we have a case for a squeeze where, in the short term, we could have a very significant spike to the upside that could be pushed or fueled by spot activity getting behind the move. I don't think we have like a really kind of significant case of that right now. There's not much evidence behind that, but it's starting to be more prevalent, which means maybe we do that down at 45, maybe we do that again down at 46, but it remains to be seen either way. You guys following along? Does this all make sense? Let's go back to the chat for a sec. Right. This order book is, that's from Bookmap. That's an add-on on their marketplace. A lot of the times, Meridian, with respect to these large levels, since they are advertised, they are easily front ran. So that's why, like I said, I don't just look at this and say, I used to talk about heat maps. I'd say this all the time, like heat maps are on their own. They're not actionable. It's how this behavior changes. And it's also with respect to what else we're looking at outside of this. So if you have a big wall down here, like at 45, and it's not big, it's like $16, $17 million, that sits there. This person who wants to get filled, maybe they expect there's a lot more violence to come. But otherwise, if not, especially when we start having more volume put into the upside, they might start realizing they're not going to get filled. And even if price starts to come back down, it's likely that if they're this obvious on the book that they're going to get front ran. And that's why there could be a lot of psyops, right? There could be, what looks like a significant bid, and meanwhile, all the buying activity coming in based on the idea that there's the support there is buying into someone else's short or offloading a position above, either in an iceberg or some other bid. Or on the futures exchange into a short position. And this right here is this is the multi-book on Bookmap. So this is all of the relevant spot exchanges combined. So if you're so how does an order flow trader differ from a PA trader? Price action, right? Candlesticks, 4 data points, right? You don't know in a candlestick if most of the volume occurred in the wick, if it occurred in the candle. The idea of a wick looks thinner, right? A wick looks less substantial than the candle, right? Just by size alone. but most of the volume in a candle like this could be all the way at the low. So one of the tools that an order flow trader might use, you don't necessarily have to use it, is a footprint. You could see the actual buying and selling activity that took place. And in its raw, markets in their rawest form are just that, right? The interaction between buyers and sellers, aggressive buyers, aggressive sellers, passive buyers, passive sellers. So watching how this behavior occurs, right? Watching these interactions, seeing what happens with price, that's really all order flow is. Observing the flow of orders as they hit the market. And whether or not they're having a significant impact or not can lead to pretty different results. You know, one of the things that I always talk about is seeing a lot of activity come in and no movement in price. And the open interest thing that I just went over was an example of that. It's obviously a lot more nuanced than that, but if you're asking that question, you probably still have a lot further to go, and you should start with price action. Really just, my focus is on aggressors, right? On market orders. I trade spot and futures. Right now I'm flat spot, completely in USD, and just trading intraday futures products. And the exchanges that we use and that I use have been listed in the description below now for forever. So if you want to take a look at those. The red line on Bookmap, this is, so one of the one of the more useful features of Bookmap is you're looking at the running bid and ask. So you're constantly seeing the spread between best bid, best ask. Looking at the multi-book is not going to make that useful because you're going to have a lot of locked looking markets or a lot of crossed markets, because since there's a bunch of different exchanges right now coming into this feed, you know, one exchange might be having a bid that's trading above the other exchange's ask, right? And that would be a locked or a crossed market. So I have this multi-book setting to, I think, a 10 or a 20 tick. So you're not really getting anything from this, but if I had this zoomed in or on sort of the base tick setting, you would see how the best ask in the red and the best bid in the blue are trading with respect to each other. And you can see when spreads blow out, when these get really wide. You know, I'm not going to gain or glean too much insight from just looking at this. But if you're looking at it on a lower tick setting, you could see when spreads blow out. When, for example, the bid ask blows out. So what you're looking at is basically the top of the order book, constantly the best bid, best ask, and where it's trading. But like I said, this aggregation is making it all sort of look at one price. It's looking like one price because the tick setting is so high. If we were zoomed in on like my other chart that's off the screen, you'd see that it widens out. Yeah, I've shared my entire layout a bunch of times, so I definitely don't want to continue to go through things I've gone through. But I have, you know, what you're looking at on the top right up here, tapes, CVDs, liquidations. You only see the tapes right now, but there's a whole screen that has all that information. You know, I have profile on another screen, footprint on another screen, Bookmap top left entire screen. To the right, you'll see one ladder. But I have, so this is the multi-book ladder, and then I have my actual trading ladder for the exchange that I'm trading on. And I just started looking at the multi-book ladder. Again, this is a bunch of exchanges, so not really getting too much from this, and I have it at a higher tick setting, but I just was messing around with the platform today to see whether or not I could pull up multiple DOMs from different instruments and how it would respond, and Bookmap is phenomenal, so no issues there. All right, so let's look at the low time frame because I wanted to do this stream to sort of cover some easier stuff. Again, the point is like, yeah, are there times where, you know, we're looking at basically a 3-drive pattern right now. You know, a lot of the times you'll see that develop in the high time frame and you'll get relief. But do you want to be part of that one time where the market continues to nuke down to 42, and we're talking about at that point, you still have a pretty significant drop. You might be near the bottom, but this entire move down from the break of this higher time frame structure, people have been calling bottom the whole way down. So my point is there are some tools where you could have a little bit more, a less, I guess, subjectivity in where the trend is sitting and how the trend is behaving. But let's go down to the lower time frames. So my dog must be breaking something out there. Hold on 1 second. Might be a tree ornament. Let me just, I'll pause for 1 second. And where is the pause screen? Here we go. Okay, say hi. All right, so let's go over the low time frame stuff. I wanted to go over that higher time frame stuff. Yeah, sure enough, she, what did you have? You had an ornament in your mouth made of glass, so that's not good. All right, 1 sec. And let's go back. You go lay down. Place. Okay. Yeah, she does. All right, so from a weekly standpoint, what I have right here on the chart that you're looking at is weekly TPOs. All right, so as I said in the beginning, when price dropped precipitously, it's going to take time. We're going to form a range within the structure. We're building week 2 right now. There's a good amount of soak, I would say, taking place at these lows. So I don't want to call bottom for a lot of different reasons. I want to have pretty strict criteria for getting re-involved. But right now, the amount of activity we're seeing at the lows, we're starting to see that open interest increase on some of that downward activity. We're starting to see that funding is a little bit more obviously negative, not just in and out temporarily. It's kind of shared across multiple exchanges rather than one exchange trading at a discount for just a short amount of time. Are we watching Batman? What's up, puppy? Hey, get off of that. Now she's eating stuff on my shelf. But still, we're basically right back above the prior weekly's low, right? So we're still trading within a range. And I think it's really important to understand context, understand what environment that we're trading within. It's not like we've lost any kind of significant level and now are retesting the underside of the structure. If we look at the daily, we have this 3-drive structure trading below the prior swing low, but that's how you build 3-drive structures anyway, right? It would imply that one low is ultimately lows are going to continue to look worse. But if you look at the high time frame, very much in a range still. Now, what this does is obviously should give you, hold on 1 second. I'm sorry, guys. Now she's eating shit off my shelf. Come on, stop that. Come on, get up. Come on, stop. Fucking janky stream. What this actually gives you, though, is obviously clean area to operate within at this point. You've been rejected at the high. Lows are holding so far. Midpoint of the range, right around 49. At this point, if we were to trade back above, reclaim 52, 53 area, well, then I think you're obviously looking much higher again. That 57, that 56 level is sort of the 50% retracement from the high, or rather from the high down to the low would be a 50% throwback at this point. So looking at the weekly right now, not bad. I mean, if we look at it on the candlestick chart without the TPO, looks a bit uglier. But again, you see enough. Again, I don't want to call bottom. I think it's I think we're close to it. And I think, yeah, I think it'll be a lot more obvious tomorrow after the FOMC, when I think the market's going to realize that it's the end is not necessarily near. But you could see that even in recent history, we've had a bottom that has developed somewhat similarly, right? You have what looks like a pretty balanced weekly. You get a significant drop outside of that. If you're just looking at the candlesticks, it might look ominous, but it doesn't take, a genius to look, back just to September, August period where we had relatively the same structure. It's not good that we came all the way back down to that after doing it already, but needless to say, I think you get my point. Looking at this on the daily, you basically have a Dalton setup, right? So if we look at how the market has moved from left to right this entire time, we had the fake out and failure at the high. We had the fake out over here, a bunch of participation in this high, sort of a nice little delta unwind. But more or less, the market is trading, again, within the lows of the range, right? So if we go back to, this is December 10th, December 11th, yesterday we had a probe of the lows, first significant amount of volume that's come in. We tagged that 46 handle, and now we're trading within yesterday's value. Again, a good amount of soak. Today is very balanced. I could see us, if we're able to hold this level, so hold the daily open, I could see us playing back up here around 48, 49, right? Because ultimately this is not a very, this is an efficient move. An efficient move down, but there was not much structure established. So, local area rejections right around 47.7. Today's highs, today's value area highs around 47.3. Today's value area low is right around 46.6. So if we're able to, after putting in, pretty balanced day, start trading outside of where today's value is established, it's not necessarily the best idea to look at today's value. But if we're able to hold yesterday's value, so again, we're kind of dancing right around that level, but let's just say for all intents and purposes, if we're able to put in a base above 47, I would just anticipate that one, you're going to revisit this high right here, and two, it's likely that you could cover this. It's not a gap because again, I wanted to make sure I said that was pretty efficient selling. But if we're trading back above 47, if we're able to hold yesterday's value, and yesterday was a trend day, I would expect that we get a throw back up to that high. Not necessarily the high, right? Not necessarily 50K, but at least back up to this meaty point of the structure. And if this is a breakdown and this was a strong trend beginning, this bounce should be the consolidation that leads to continuation, right? So we should see that this failure up here holds, and this region right now should maintain as resistance rather than re-accepting back into that level. And if we look at, I took it off my screen, fuck. We'll just throw the CVD on here. We'll put on Bybit and BitMEX. If you guys have any questions while I'm doing this, feel free to ask. Sorry, again, my streams are not perfect, and the dog pulled me away from the computer. Was that 3 times now? Ooh, whose CVD was just ripping up like that? Phemex. What you could see though is you have some absorption if we're looking at Bybit and BitMEX at this low. Stablecoin margin contracts, I don't know though, because that's kind of in the face of what we're seeing in coin margin contracts. So coin margin contracts, CVD continuing to trend down. So we'll specify this as just Bybit right now, and then separate it for BitMEX. They're basically on their own showing that they're still putting in new lows, right? And price is able to make a higher low right here. So, it's obvious if you looked at some of the levels that we traded into, again, that 46 handle where they kind of stayed put. I think that the market is finding a base in the near future. So this is a good sign, right? Some offsides or level of offsides behavior into that low. Does that all make sense? Yeah, I think Bitfinex has been pretty significant in the past. So one thing that I've noticed in this entire range, and on its own, it's not enough for me to just get involved, is that BIFNX has been trading at a premium. So BIFNX right now is trading at a premium still. And it's been anywhere from, right now it's only a $30 premium to futures, but it's been, you know, upwards of $75 to $100. Today is very balanced so far, which is good because what we're having is, you know, we have an inside day setting up. I mean, technically we have, how many hours we have left in the day? We have 6 hours left in the day. So that's not, what you're looking at right here, this is weekly VWAP. So this is connected to, obviously, I have the weekly TPOs on, but I have weekly VWAP with 3 and 4 standard deviation bands away from it. These tend to be pretty good areas to get involved when the market gets that far away from what is the current week's VWAP. But what I was saying was we have an inside day developing, and this is a really actionable setup in crypto, especially the last 6 months, especially when it's an inside day where you have a very balanced day for the day that should close out and act as a trigger. So inside day, low, high up here. For that prior day, it's off screen sort of, but you'll see my point. Today, high, low. When we close, an inside day just means that this day is completely engulfed within the prior day. So this day can basically Pac-Man this day right here and eat it. So what this usually gives us a pretty clean setup around is when, let's say we close right here, right? You know, we could continue to move lower, could continue to move higher. High, low, when this day opens, acceptance below this low or acceptance above this high usually leads to, in this case, I don't want to extrapolate too far, but the prior day's high or low. Base case, you're looking at that. So not for nothing, I don't think I want to think like that initially. And just for the sake of sticking to my plan, I'm trading from one sticky point to the next, right? Until I think I have a little bit more evidence, because I don't want to get caught off sides with being hopeful. So let's say, for example, we close today out and we trade, we find footing above 47.9. I would be looking at a short-term trade between 47.9 and like 40, you know, the point of control, the sticky area right around 48.7, 48. It's right around 48.9. So it's, you have like a 1,000-point move. So from this high to that level, right? That high volume node. You know, maybe more conservatively, if you want to go the underside of that structure and you're still looking at, you know, a 500-600 point move. Take those setups all day, right? The low would be, you know, close out, open. Let's say we close out and we break below 46.3, today's low so far. I would be careful because I would say that you probably get the low break down to 45.5. So again, another $600-$700, you know, $600-$700, you know, move down. I don't think, again, I would say if we, you know, if we play into yesterday's low, I would just look for a fake out, right? Let's say we end up getting a break below today's low. Take that trade, right? I'd take that opportunity. I wouldn't hold it expecting much lower. Just some other details, maybe some hypotheticals. So expect maybe a lot of crowding if this low breaks. So if we break, just to give you an idea of what we're looking at. Come on, you, okay. If we break 45.8, you could get a lot of crowding. You could set up your larger squeeze right below there within this structure, right? Another thing that I would be conscious of is, let's say that the market is favoring the lows going into the close, the lows of today, right? So favoring the lows of today, soaking some more activity down here. Oh, this thing's going to roll over, blah, 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 blah. If we open and our immediate drive is below yesterday's low, I would just be mindful of a fake out as well. I would be more inclined to get behind the short if, let's say, we balance within, we open, market drives upward after the open and then fails, and then we have a break below yesterday's low. It's today's low, but when we close out, we have an inside day structure. Then I'd be more confident in this breaking down after we have a fake out to the upside, because again, the idea of us just one-sidedly from the open cruising through the lows, it would make me think of a trap setting up that ultimately, like if that happened, right? Let's say market is favoring into the close and drives into the low right upon tomorrow's open. I would expect or look for a trap setup to develop down here for a squeeze back upward. So just sort of hypotheticals to go over. What else? And a lot of the time, like if we get a drive like that initially, I know where the level is in terms of the chart, but I'm looking at the footprint in the tape. I want to see that we get a substantial puke of volume into that level, right? And the moment we start ticking above that level, or the moment that that area stays bid, I'm probably going to get behind the position. Other situation, let's see. What else do we have? And the good thing about this inside day setup is you could have it any candle, right? Any candle could set this up. So the candle could have been, an inside day like this. This is an inside day, right? But how price moved within these candles can be completely different, right? Maybe it trended the entire way back up, and then we still had an inside day, but price was one-sided on the way down, one-sided on the way up. That's an inside day, but a better inside day is actually what we have, which is where you have pretty gappy candle, meaning price came, trended down, and then the following day that is the inside day so far, right? It could change before the close, is very balanced. Because ultimately, a lot of the setups that I look for as well involve breaks from balance, where price is very comfortably accepted within a level, right? Value is developed, market is in agreement, and when the market probes outside of that level that is served as sort of the range high, range low, becomes very one-sided, and again, that break of agreement is that break of agreement occurs. I don't really talk too much about individual stocks. Apple is a lot of the S&P right now is Apple. So I'd just be mindful of that. Hold on one sec. I'm going through some of your questions. Okay. One sec. Where did you learn to trade? I didn't learn to trade off of the internet or anything. My first job in finance was when I was 18, so I have a pretty good background. I'm sure like a lot of you guys are new to the stream, so you asked some questions that I've gone over before in previous streams, and like biography and all that stuff is one of them. But I've managed my own money, other people's money, and traded for myself now for the last, going on, I guess, 4 years, 3 years. How many trades I take per day? It's purely determined by the market. And I don't have a percentage goal. Hey, what's up, AP? So I don't have a percentage goal. I do have like a step away level where if I'm just having a shitty day, I just log off. And usually that's in terms of frequency of losses or just a dollar amount, but I usually don't stick my neck out there too far to lose a significant amount per trade either way. And I've had bad spells, but I don't usually have that occur where I'm taking myself out of the market because I have a bunch of losses. If I have done that, I've probably been vocal about it on Twitter before. So Aggregated funding, that's on Coinalyze. So that's right here. And then I look at Levitas, which has more of a granular breakdown across all the exchanges. I mean, honestly, Tic Tac, when I do the call-in later, if you want to hop in there, there's like, so it's so loaded, you know, how do you master a strategy? You know, there's a lot of really simple trading opportunities that exist that people, they might either are not aware of or they're just boring. But if they consistently just applied them, recorded all of the market feedback from them, they would see that there are some really simple setups that occur, again, quite frequently, that they could just mechanically take and build a system around. But that's really complex, man. Mastering a strategy requires just time at the screen, hours in the market. And there's so many people with different approaches to the market, so it's not just like there's one that's one size fits all or one is better than the other. No, I don't really consider monthly opens. The levels that are important to me are the levels where most of the activity occurs, because that's where people are going to be changing positions. If we trade through or back below those levels or back above, areas where the market has been interested in the past, areas where the market isn't interested. And that's why TPO is so useful, because I could basically see right away where the market is favoring, where it's not. So when you have selling tails, buying tails, evenly built distributions versus imbalanced distributions, you get a pretty good idea of that. Breakfast of Champions, I have oatmeal with a handful of blueberries, a quarter banana, some cinnamon, and a little bit of brown sugar. And then I have usually egg whites. And I've had the same breakfast now for probably the last, I don't know, 3-4 years. Never really changed it up. Maybe I change it up once in a while. Like if I wake up and I don't feel like making breakfast, my wife doesn't, like, we're good for once a month a DoorDash from a breakfast place. What else we have? The S&P trading back in 45s. Yeah, I mean, right now the correlation between BTC and crypto is BTC and the S&P is pretty strong. I mean, there you go. If anything, Bitcoin bounced a little bit more, but we zoom out. Hold on. Actually, let's put the hold on, ES on BTC, just because I want to know where I am on the chart. All right, here we go. So those flat points are where the market is closed from Friday evening to Sunday evening. But you could see that when we're down on the lower time frames, when the S&P is just unidirectional, one-sided activity, sellers, in this case, doing their job, Bitcoin follows. And that sounds kind of silly, like sellers doing their job, but I mean when there's a dominant, when there's an aggressive amount of selling activity to the point where it's overwhelming price action in the index, then correlations start to increase. Correlations go to 1 when the S&P is really taking a hit to the downside. So, but what you don't really have to look at the S&P necessarily. You could just look at the VIX. Like I said, when the VIX is when the VIX is elevated. So look at the VIX, and we'll put on BTC. Just look at every major spike in the VIX. Now, for any of you guys who have been paying attention, I talked recently in the streams about how this regime has been different because equities have been able to move up on an increasing VIX. So the VIX going up, equities going up. Normally, right, in the past, it's been a inverse correlation of the VIX going down, S&P's going up, right? S&P going down when the VIX goes up. Now, the VIX is connected to the S&P. So that's obvious, right? But when the VIX is elevated, it's just another way of looking at volatility in traditional markets. So you could see that when the VIX is spiking, it is it's hard to, it's happening as this is occurring. So it's not like the VIX spikes and then Bitcoin dumps. So it's not necessarily causation, but it's a reflection of the overall environment. That's the best way I could put it. So until the VIX is back down, below 20, I just think that it pays to be more cautious with BTC. We haven't really seen the market ever start trending upward when the VIX was still elevated post spike. ICT is, I don't know. I don't want to talk about ICT. ICT is a salesman. He's like a snake oil guy who took concepts that already had words for them and created his own terms for them to make it sound special. But whether it was like breakers or order blocks or whatever, I forgot what specific term he came up with. I'm not a big fan of ICT. But the S&P isn't looking for retail stops. So that's like a common misconception. The S&P is like, they're hunting your stops. Hedge funds are hunting your stops. They don't need your liquidity necessarily by hunting a stop below a local low. In crypto, you see there is like this kind of cannibalistic behavior, like poaching of stops because retail is using high leverage and it's more or less predictable within a 1% to 2% band that they'll take some. Yeah, I'm going to do a book map walkthrough. ETH BTC chart looks good, right? It's changed in the last couple of days in terms of the local trend, but it's still, ETH BTC chart still looks good. I just worry that it looks good at the wrong time. Technically, I don't like to do a whole lot of trading against BTC and with regards to looking at the pairs, other than seeing, this is showing signs of relative strength or weakness. But I don't really like to say like, oh, this is retesting this, I have to buy ETH now. I just like to get the overall picture. So. No, I don't use Trading Light. I've played with it before, but no, I don't. See, I'm not going through any alts right now because they're not worth looking at. Everything is getting hammered. Everything is down pretty significantly, actually. If people are still if you start seeing people on the timeline like, hey, where do I start shorting alts? Maybe we're finding a bottom at some point because they're already down. Like, if anyone starts talking about how shitty they are and they haven't been, that's probably a good sign because they've been going down now for a while. That's like one of the ways you can pick up on sentiment is when people start getting really vocal about things, direction, but the direction has already been in place for a long time. Because that is usually sort of the confidence hedge or cheering their position on when it's already really obvious that the market has been doing that thing. And it's kind of like people are only willing to say how bearish they are or bullish they are when the market's already moved down a lot. That's why Bitcoin is ugly. It would have been great to hold the all-time high. But aside from that, unless you have some sort of bearish existential case against BTC, like it's already moved down a lot. If anything, I'm expecting that we find some kind of bottom here and that February, March, whatever, within first quarter, second quarter, we're moving up again. I don't know if it means back up here, but I'm just saying this structure is not going to just go down. I mean, I'm very confident that that's not going to happen. I'm very confident it does what it always does. Looks really shitty and then bounces a lot. And then looks really good for a long time and then fucking nukes and looks terrible. This has been consistent forever now. It's just come in different forms, different shapes. But it's been very one-sided now for, look at this. This is a really, at this point, this is 5 weeks long. Just sustained downtrend. And at a certain point, you should start looking back and start building a case around statistics, right? You know, we know things when things get a little weird. Oh, we're on our 12th day of red. Or we're on our 5th week. Like, at that point, are you still going to be betting on further downside? Especially, and I think that this is more nuanced because I think a lot of this is, there's a lot of clarity that's going to come post FOMC meeting. And it's whether or not the narrative changes at all. And you'll see the market's going to tell the truth right away. The market will tell you exactly what it feels. And it doesn't pay to go against that. So let's say like you sleep in tomorrow, you miss everything. FOMC happened. It's 4 o'clock in the afternoon now. And you see the ES has ripped up. I mean, I'm looking to buy a dip probably at that point. You see BTC has ripped up. It's back, if we look at just where we sit. I mean, we're within a range. This was a strong move down. This is a trend followed by consolidations. We're consolidating still. So if we rip up, let's say post FOMC, just a couple situations maybe to go over and then wrap it up. The bulk of activity the last 2 weeks. Here's your VWAP. This is for this week, so it's more local, right, where it's only on Tuesday. But midpoint of the range, VWAP, all kind of the same area. 49.6, 48.8, point of control. If we look at the volume profile, just this fixed range, visible range, excuse me. Point of control for what we're looking at, 49.232. So where most of the volume is transacted on this screen. So most of the volume traded, we're below it, sellers in control, right? Post FOMC, let's say the market even more attractive. Can't have it perfect, but let's say we get a move down into the meeting and then post meeting, it's all resolved. The market is sitting above, today's value area high, taking the lows. We have the inside day setup that failed at the low, and we're now moving back up. If we're back above, I mean, I obviously take setups earlier, right? I'm taking much more setups than I guess a lot of other people. But if we're trading back above, today's value area high, let's say into tomorrow after today closes in 5 hours, take the lows back above the value area high. I'm looking for a move back up to the point of control. If we're back above the point of control of this entire structure and things are positive in legacy, what you're starting to do is trade above where most of the risk was put on in this entire structure. And if most of the risk was even half and half split between buyers and sellers, well, if you're trading above where most of the sellers came in, then at that point it looks better, right? From a bullish standpoint, you're probably going to see more of an unwind. So then you're looking at point of control, 49.27, back up to at least these highs, right around 52, and maybe throw from there, even further up. But again, after FOMC, I don't think it's worth fading whatever the market does. I'm not talking about if you're watching the market during the FOMC, if you're watching the ES, you're just going to see this, right? Bunch of shit. And the market moving up here doesn't mean to just go with it. The market moving down here doesn't mean to just go with it. No, I don't have takes on Tim Sykes. I mean, there's a lot of kind of grifters. There's a lot of grifters in the space. I know some people that, I talk about, for example, Tim Sykes, ICT. I know great traders who studied under them. these are people that, didn't have any kind of background in finance. Um, I have a pretty colorful background. Like I've done a lot of different things. Like I said, my first serious finance job was when I was 18, and my my friend's best friend from college, his brother owned a brokerage with a prop shop arm. And then from there, I've done a bunch of different things. Like I've said, I'm pretty sure everyone's familiar with my biography at this point. Um, but I had a pretty good base built. Always been a finance guy in that sense. Also bartended too. Like I always talk about my favorite job. I guess we're kind of covering biography. Um, uh, Favorite job ever was bartending back in the day. But I know people that just came into trading recently, and they've like learned from ICT. They've learned from Tim Sykes, and they're good traders. And I don't like either of the people that they learn from. So yeah, I'll send a bookmap promo code. I actually just found one. This is a Spaceman VWAP. You could anchor it from any setting, so I have mine set to the weekly. But I could change this up. Standard deviation bands, we could change this to, the 2 weeks. Now it's on 2 weeks. So it might be good to use within this range right now, because you still have a ranging structure with the last 2 weeks. No acceptance majorly outside. So you get range high, range low as being the high and low standard deviation. No. ICT is a trader, or he's a teacher primarily. I think he turned down a lot of trading opportunities to challenge people who gave him pretty good, situation to take advantage of, and he's kind of a guru. I think I'm probably going to wrap it up though, guys. Most of this stream, I just wanted to go over some of the simple things in the beginning. Again, things I don't use, but they can be very useful. And I only say this because, markets move down a lot. People want the bottom to be put in, but wanting it to happen and it happening on its own are two different things. And it's easy to lose actually everything in this entire process of the market correcting, just buying every dip thinking it's the bottom. So rather than do that, slap on a moving average, put on some Bollinger Bands, whatever you're comfortable using, throw on the MACD. It's a little lagging, right? But it is useful. Guys, have any other questions? There should be the links below. You could use Phemex.trade if you're interested in signing up at Phemex. They have a bunch of promotions still running for the holidays. So, I would take advantage of it if I wasn't already on exchanges. On the exchange. So again, I think the setup that I'm looking most at right now, because today's so tight, is that inside day break if we get it. And the tighter today goes into the close, the better. But I would just be mindful of, again, let's say we close at the low and we just one-sidedly move through, I'd be mindful of the fake out. I'd rather see, market ends up here, opens or drives upward after the open, and then falls through the low before taking a move back down to the prior day's low. And then again to the upside, reclaiming 47.9 or today's highs. I think you at least get a move back up to right around that 48.5 level. So $500 or $600 move, but you could be looking at a more sustained move at that point. All right, guys, gonna wrap it up. Everyone have a fantastic evening, and I'm gonna be doing the call-in. So for those of you that want to talk and ask questions, make sure that you join. Till next time. All right.